Hey traders, Nick here. Let's see if we can come up with a game plan for the week. But first, let's look at last week and what happened. It was a pretty bullish week. This is the S&P, SPX, uh, Monday, Tuesday, Wednesday, Thursday. So we had one red day on Friday. But look at the week. It was incredibly bullish. So we were almost at 4,500. Remember, for a couple of months now, we've been saying that the thesis under which we are operating as a group was to be bullish, buy the dip inside of a bullish market. I said the bears are in trouble unless they get a miracle headline, and they never got it. Also said 4,500 before 3,500. 4,500 before 3,500, and it looks like we were right. So 3,500 is not even in the picture. It's down here. But at a point in time where I said it, it was iffy. So that was the premise. So what about now? Okay, so the bulls are still in charge. We had an incredible rally. This is the QQQ. Whoops, one too many Qs. And the IWM also finally broke out from 180.5, which is this guy right there. So that's great. The weeks are incredibly bullish. However, now all of the indices I'm looking at are sporting something that looks like that red W. So technically, that just says, okay, the charts are a little bit extended. They could use a dip. Whether it comes or not, I don't know, but I should be ready for it. And I'm getting us ready mentally, because it's not going to feel good, because we've rallied so much that the small normal dip is going to be is going to feel hideous. As an example, this is the IWM. If they just go back to that problem area that we just cleared with one day, that's like a 3.5% drop. Okay, on the QQQ, it's even worse. So the QQQ, if they just come back down to this node or that node, it's probably 10%. By the way, folks, that's 10% down to this node. 10% is a full-blown correction in Wall Street terms. And that wouldn't even be halfway of the rally. Imagine if we go down to halfway, which would be down here somewhere, from here to here. Yep, exactly, 316. So 50 points is going to feel very, very painful. I think we have some support after, I would say, a 4 or 5% drop, and then bounce, and then a drop another 3 to 4%. Those are possibilities. Now, I don't go out and short markets. So that puts me in the mindset of catching dips. So one of the things we said, the 4,500 before 3,500 on the SPX, we were correct on that one, correct? And so we were buying dips. So what could cause the next dip? I also said the bears need a miracle headline. Well, guess what? This week we have 15. I counted 15. There might be more. Fed speeches, including 2 from Powell. I believe he speaks on Tuesdays and Thursdays. Not sure about what, to who. Maybe it's the banking committee and the regulating committee. I don't know. So he's going to have to blab his mouth again twice this week. This after they just had a policy meeting. So in all fairness, he shouldn't say anything new, because they just had a policy meeting and they told us what they meant to do. But he has not been nice to Wall Street. His words are hurtful almost on purpose. It's like he gets out of his way to injure the headlines with his words. But he told us what he's going to do, so I would ignore his words and just look for opportunities that fall into support. So what do I look for? Okay, I don't buy indices these days unless I have a dip. And if I do get a big dip, I would probably, on a short-term basis, try to get calls in it after the dip. Otherwise, when I say I'm looking to buy dips, I'm looking for quality companies that fall into support. I don't mean every red tick as a dip. For example, if Nvidia has a bad couple of days and it drops 5 to 10%, it's not one of those dips I'm looking for. It's way too high. Nvidia, I would need it to be down in the 330s for even to be tempted to catch that falling knife. It just rallied too much. And if it never comes back down, I doubt it, but if it doesn't, then so be it. I missed it. I'm after the easy pickings. So let's see if I can think of another one. Say Disney. Disney has been down on its luck. It's a quality company and the income is not that bad. If it falls 5%, it would become pretty interesting. Maybe even 10%, it would be even more interesting. So That's the kind of dip. A quality company, this is a quality company, falling into support, this is support, this is support. If this happens, I would be enticed to nibble. And I don't need earnings. It also doesn't hurt to short a few companies like Nvidia to sell a credit call spread. I'm not buying a put where I'm actually needing something to happen like right away. I opted to sell a call spread. So this is basically getting bearish but leaving some room to rally. I just want balance. Most importantly, I want to close winners. So if I have a trade and it's 50% of maximum gains, or 40 or 60, and it has a lot of time on the clock, I'm tempted to close it. You never know what happens. Case in point, what happened to Humana. The trade was 60% maximum gains, and then one headline, unfortunate headline from the CEO, he chose to make comments out of context, out of time, and caused the stock and soured the trade. And so, in order to avoid that, I closed the sure things. As high as the indices as they are right now, I don't want to be in the mode where I'm not closing anything. I keep adding and adding longs and adding longs. I don't know how long you've been trading, but I've seen some corrections that take all winning positions. They were all bullish. They all sour at the same time because the corrections come hard and out of nowhere. And I'm not talking like I see something coming. I'm talking the charts are extended and they are all rising wedges. So all these red lines are bearish, potential bearish setups. They are not setups right now. They need confirmation and they don't have it. One thing I can say is we're running into a prior fail zone. So what if we have a little dip, but that little dip is going to feel bad? I'm preparing us mentally that if we do have a hiccup, oh, Nick said it was going to the moon. Yeah, but also Nick said that we should get dips in order to get the rally on better footing. So this rally is getting pretty long. This is a perfect extension from the breakout from here. You run from here to here, and then you have the same rally from here to here. This looks well balanced. Anything more than here would be like the NASDAQ, be just unusual. This chart is very unusual. Okay, so the mode is buying dips. Not every red tick, depends on which companies. Some are no touch until they drop a lot. And the bulls are winning. The bears need a miracle headline. We also have 15 Fed speeches, including 2 from Powell himself.